Okay, I want to start a small series that is documenting my 10 fair value gap setups 50 times. Process here is skill, experience, and process. The focus is on process. So work through this. I want to point out that process is the number one objective. Experience, visualizing the opportunity is the second. Skill and leverage is the third. So what you're looking at here is the 60-minute chart with a full week's worth of data and price action. What I'm going to focus on is the Friday setup. I'm going to set the context for all of it as I go through. So first of all, here's the Sunday Globex open. There's a tiny little gap there. Notice that on Monday, we pull back roughly 50% and hold and rally. We're dipping into discount and rallying on Monday. We do have a move higher Tuesday, and we almost make the relative equal highs on the daily time frame, which is a location where we expect high time frame liquidity to be. We pull back again, roughly 50%. We rally through. We rally into that 4,300 area, 4,307 to be exact. It's what we care about. And then on Wednesday, we've purged. So there is a sell-off back through 4,307. And it happens during the day. So that sell-off breaks through and a rebalanced pivot and leaves a fair value gap. And the open question is, shall we go higher if we test the deep pullback, or shall we pretend and go lower? So meaning, see, we've purged this, and then in the Globex session, we took that out. Here's the relative equal highs, purge and revert of 4,307, up, down, and then the Globex down, breaking that Wednesday's low of day. So as of Wednesday, the high of week or low of week should be in. So low of week, high of week. One of those is likely in. Anything above 4,307 is premium on that higher time frame. Very good place to sell. What happens? We create a dealing range, FOMC, test it, and we push lower. Now, let's take this one step further. Let's do the purge and revert 3-day look back. Notice that we have lows here, daily lows that we should be targeting on day 2 and 3. Day 1 is the purge. Here's day 2. Here's day 3. We're looking back. Day 1 or day 2 is already taken in the Globex session of day 1, and day 3 is very likely to be taken if that Globex session is broken lower. So after 4,307 is taken, and if we're going to revert, we should be looking for the lows of the previous 3 days as targets. Now, if we're going to go higher, we're going to go higher. So that would be day 1, and then we don't have days 2 and 3 to work from. Notice on Friday that day 3's low is very nearly taken, probably will be going into Sunday. So now I want to focus on the basic shorts that happened. There was 2 major shorts that happened. One was the first test up into at the open, and here's the order block that was tested into. This is on the 5-minute chart. It's the chart I'm most comfortable with. Here's your scale location, and there's your target. Excuse me. This is your first trade target, and this is your second trade target. You'll notice the mean threshold in the open of those order blocks right here and right there. Study that for a second. Okay, let's dig into the first trade. The first trade is the short based on the model, seeking the lows after the high of the week is in. So that's the idea. So here's where we would scale first. That is near to the news open, and it's a pivot. It's an important pivot, and then the overnight low is our target. You can see that's taken. So let's just talk about the logic of the execution. The high goes in right here, and then a low time frame, there's a relative low or higher low, lower high. So we want to set our limit order right there. Okay, on the second short, It looks like this. We're looking at this area of liquidity right here. It's afternoon pullback. Here's those raid locations and the order block. So the high goes in right here after raiding the location, but I expect that to be pushed through. It is. And we get to the bottom of the open of the order block. So you can see that anything above that is fine to execute, or you have this other location you can also execute. So it tests into there, pushes down. It doesn't need to break anything. It's fine. It's appropriate what it did. You could also execute right here. You see this fair value gap gets created, tested up, 1 push, 2 pushes. Definitely take that. And then scale and the target. Now the last trade I want to talk about is the power of 3 Judah swing long from the overnight low and a high time frame fair value gap. You notice that there's all these higher lows that go in at this 60-minute fair value gap that was already there. So what's important here is that we have a low test of the high time frame fair value gap, and we do not have a purge. So at no point does it take out any stops. So maybe that means that we're saving all that liquidity for the run lower, which we expect to happen based on the time frame of the week playing out. So note that the low, and then a quick poke through. This is this low right here, fair value gap, high time frame fair value gap, break of microstructure, market structure shift here happens on the 5-minute, and it happens on the 1-minute. Low, poke through, execute. And then you have a scale here, potentially here, but I would scale here, and then your target's up there. Those are 3 trades that are based on the fair value gap model, based on the purge of liquidity model, based on the idea of fair value gaps being held and the market moving from one side of the other, markets moving from one side to the other. Everything in between, the retail logic, there's alignments in it, but it's all kind of guessing. It's all kind of guessing what lows will hold and what lows will not hold, and highs and etc. And look at all this. Look at all this pullback. Your retail logic, you wouldn't hold that, but because of this model, you would. So this is a complete difference. And the objective here is to find 50 examples of this. Now, you already have 50 examples of this, but I think this format is going to lend itself quite nicely to you really learning the skill and the processes involved so that you can actually build leverage with this model.